I suggest that you watch this video with a notebook in hand because it's gonna be heavy in content. But I definitely hope that by the end of this video, you'll have a clearer idea of the ongoing ownership process at Manchester United. Now, before I get started, please make sure, if you like this video, to give it a thumbs up. It's effortless on your part, but it helps immensely with channel growth. Also, if you are subscribed to the channel, please make sure to hit that notification bell button so that you don't miss any of my upcoming videos. So without any further ado, let's get going. So for us to understand the Manchester United ownership process and to predict where it is headed, we have to understand the Glazers' mindset. And to understand that, we have to go back in time to the day when the Glazers actually took control of Manchester United. The Glazers bought Manchester United using a leveraged buyout. What this means is literally buying an asset with money that you don't have by taking a loan against the same asset that you are buying. Imagine you had a condo or a beach house that you were using as an Airbnb, and it's very successful. For the past 8 years, it's been making good money for you. Doesn't matter what the season is, it's always full and it's making you a ton of money. I identify that as an asset. I come to you and I'm like, hey, do you want to sell your beach house? I would like to buy it. You're like, sure. Do you have $1 million? I'm like, no, sir, I don't. Well, I can't sell it to you. So I go to the bank and I say, guys, I have $200,000, but I want to buy this asset that costs $1 million. I need an $800,000 loan. The bank say, well, why are we going to give you this loan? And you say, well, because I'm going to put that same beach house that I'm buying as collateral. If I fail to pay you back, you can just take it. It's a really nice beach house. But also look at its financial performance for the past 8 years. I'm going to use some of that revenue, which is big enough for me to cover my interest payments, to pay your interest on the loan that you're giving me. The bank ponder on that, and then they say, great, you got a deal. I come back to you, I'm like, sir, here is your $1 million. $1 million that I don't have. I only have $200,000, but I borrowed $800,000 from the bank. That's exactly what the Glazers did. Now, a lot of Manchester United fans have been categorizing the Glazers as, greedy, money-grabbing parasites, right? But I think that's oversimplifying what the Glazers are. And in order for us to further understand what the Glazers' true motivations behind owning Manchester United, we need to dig a little deeper. Manchester United are, of course, listed on the New York Stock Exchange. So let's talk about stock investment for a minute. When investors invest in companies listed on the stock exchange, they usually invest in two types of stocks: growth stocks and dividend stocks. Now, what a growth stock is basically an investor betting that you are investing in a company that is going to grow in the future. So basically, the way you are making money by investing in a growth stock is, let's say you are paying $5 per share today. You're betting that within 5 years or 10 years, that company is going to be worth $20 or $30 per share. Hence, multiplying by 4 or by 6 the amount that you have initially invested. Now, what is the hallmark of a growth stock? Is that usually these companies, they do not pay any dividends. Basically, any dollar that they earn, they just reinvested into the company, either in innovation or promotion or new product development, because they are trying to grow as fast as possible and as much as possible. And so they reward their investors by maximizing the value of each individual share. Now, on the other hand, dividend stocks are the opposite. What dividend stock companies are, they are huge companies that already have a huge market share. Think of companies like Pepsi or Coca-Cola or McDonald's, for example. They already own a huge chunk of the market or of the industry that they are operating in, but they also don't have much room to expand. Think Coca-Cola, for example, where else can they expand? What, North Korea and the moon, probably. That's it. They are selling Coca-Cola products pretty much everywhere, right? And so these companies, in order for them to reward their investors, what they do, since they generate a lot of cash every year, some of that cash is divided on a pro rata basis to the investors. And that's what we call dividend payments that are paid every 3 months, every 6 months, or every year, and which is a percentage of the value of the shares you own, basically. Now, why is this important? It's because companies that are a dividend stock, they are considered, in business terms, a cash cow. Basically, it's a company that is sitting there that has already achieved and grown to its maximum potential, and it's just sitting there and rewarding you with cash. So basically, it's a cow that you are milking. Manchester United is one of the few football clubs that pays dividends to its investors. That means that for the Glazers, Manchester United is a cash cow. That means that Manchester United does not require further investment, but Manchester United just sits there and gives you cash. From the revenue that Manchester United generates, the Glazers are able to buy new players, they're able to pay their staff, they're able to pay interest on the loan that they have gotten to buy the club in the first place, and more importantly, they are able to pay the shareholders, which of course they are the majority of. That means they are able to pay themselves. So in other words, the Glazers' ownership model or their business model can be summed up as: how can we earn as much as possible by investing as little as possible? And these devils have been quite successful at it. But of course, this only tells half of the story. In order for us to further understand the Glazers' motivations, and in order for us to predict what they are gonna do with the ownership of Manchester United, with this process that is ongoing, we have to also understand the football market or the football industry. Football is actually a strange industry. If you compare it to, let's say, the tech or the automotive industry, in those industries, industry growth is actually driven by enterprise. Companies that actually innovate, create new products, and open new markets. But in football, that is not the case. In football, it's actually the opposite. Clubs are actually the benefactors of the growth of football around the world, and the benefactors of external factors that have led to quantum leaps in football, that has led to financial growth for all of the stakeholders involved in football, including clubs, players, managers, and agents, for example. To give you an analogy to illustrate this better, let's say you had a deflated balloon and you drew a few smiley faces on it. All of them are small, right? But the moment you start blowing air into the balloon and it starts expanding, so do the smiley faces. And the smiley faces are the clubs and their financial performance and their revenue. So club owners like the Glazers have seen their wealth multiply without having to invest into football, because football started growing by itself because of external factors. For example, the first quantum leap that these owners benefited from was the inception of the Premier League in the early 90s. With the first mega TV deal at the time with the Murdoch media empire. Then towards the end of the 90s, a lot of clubs like Manchester United and Real Madrid started expanding globally with preseason tours all over the world. Also, that period was sandwiched by two successful World Cups in the USA in 1994 and Japan, South Korea in 2002. Which also coincided with the growth of many economies around the world: China, India, Malaysia, Indonesia, South Africa, South Korea, Brazil, right? And so football started expanding in these countries as well, because a lot of corporations in those countries wanted to, just spread into the world markets, right? And so they needed to be seen. They needed to spread their brands. They needed people to be more aware of their existence. And there was no better vehicle than football. And clubs like Manchester United, because of their history and because they were winning at the time, were of course the best partners for such corporations. Then of course, at the end of the 2000s, there was this massive Sky deal in England, which has made most of the English clubs vastly more wealthy than their European counterparts. Only clubs like Barcelona, Real Madrid, Bayern Munich, and Paris Saint-Germain can really compete in terms of finance with English clubs. And all of this has contributed to maximizing the wealth of football owners and executives such as the Glazers without having them invest their own money, which suits the Glazers' ownership style perfectly. Well then, Mr. Scarlet Report, so far so good. What you are saying is that the current football trend is aligned with the Glazers' goals. Well, actually, not quite. Because if you've been looking at the numbers, you realize that football right now is actually reaching a stage of stagnation. It's reaching the maturity stage, and there doesn't seem to be much room left for growth. For example, if you look at sponsorship, you realize that as far as the main kit sponsors are concerned, the best clubs in Europe, which include the likes of Manchester United, Paris Saint-Germain, and Real Madrid, for example, they are all close to one another. In fact, Manchester United earn £55 million per year for their team viewer sponsorship. Well, Real Madrid, who are of course lately have been the best club in the world. They've been winning most of the Champions Leagues as of late. Well, their deal with Emirates is just £70 million. In fact, our previous deal with Chevrolet was £65 million per year. So what this shows is that Manchester United, even if we win the league, even if we make it to the Champions League every season, and even if we win the Champions League 2 or 3 times in a row, as Real Madrid did, the best we can hope for is like 75 or 80 million pounds. That would be a 20 or 25 million pounds a year increase on what we currently have. That's peanuts. That's literally 2 first-team players' annual salary. It's nothing. If you look at the total revenue, taking in consideration match day revenue, broadcasting revenue, and commercial revenue, including sponsorship, you realize that the top clubs, Manchester City, Bayern Munich, Manchester United, Real Madrid, Barcelona, all of them are really close to each other. It's just Manchester United is sometimes in the top 2 or top 3 or even top 1 if we are in the Champions League for 2 years in a row. If we're not, then we drop to the top 4, top 5. But the difference is not that huge. So that means now, football executives, especially the Glazers, they know that there isn't much more money left to be made in football. So they were waiting for the last quantum leap, and that is the Super League. And of course, that has been a fiasco. It failed. And it's no coincidence that right after the Super League went overboard and burned into ashes, that the Glazers actually came out saying that they were looking for alternative sources of financing, aka we are looking for a way out, we are looking to sell the club. It's because they cannot see where the financial future of their ownership model is headed. This is why they definitely need to sell the club right now.